Ladies and gentlemen, good day and welcome to the Q3 Analyst Conference Call of ABB Power Products and Systems India Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. N. Venu, Managing Director, ABB Power Products and Systems India Limited. Thank you, and over to you, sir.
Thank you, Aman. Good afternoon, ladies and gentlemen. Thank you all for joining us today for this call. I hope you all staying safe and taking care of yourselves and steadily adapting to the new norm. This festive time of the year, we are all looking forward to some news to reignite our collective optimism. Before I get into the nitty-gritties, allow me to mention that the Q3 performance slide deck, which I'm going to refer for my call, has already been uploaded on the stock exchange, and you can also refer that. And those of you who are connecting phones, I will be calling the slide numbers for ease of reference as we go through the presentation. We can all acknowledge without a doubt that this has been a very unusual, difficult year, one that none of us would have fathomed. It has not been easy for anyone. Business across the board, across the nations were affected. Companies in the capital goods segment were hit harder than some. Manufacturing stopped, supply chain disrupted, and exchange of goods halted or delayed. In this time, we also learned something about ourselves, our resilience and passion to persevere. At the start of the quarter, the global transaction between ABB and Hitachi have concluded. Hitachi ABB Power Grids came under Hitachi's ownership. So the quarter, we continue to build on our passion for innovation, ambitions, and our people. We persevered, kept our focus, and marched on these challenging times. I'm now referring slide number 3. Today, it gives me some comfort to say that we have calibrated to overcome the challenges. On this slide, you will see our investment in our people and their well-being, our strategic business continuity measures, our continued customer engagement, and adoption to the new norm have begun yielding results. After an uneasy second quarter, where half of the quarter we did not work due to the strict lockdowns, the second half of the year is showing some return in business activity and demand, revenue moving closer to pre-pandemic level. I'm now on the slide number 4. This would not have been possible without the united effort and due diligence of our crisis teams and country and locations and collective adherence to safety guidelines of our entire workforce. Various measures were put in place to engender a culture of awareness and action, leaving little to chance. Alongside mandated health, safety, and environmental measures, we have been conducting staff training on self-protection essentials, arranging COVID-19 awareness sessions for employees and their families, and even keeping our partners and customers up to date on due safety protocols through virtual forums. We have been cognizant as well as of the efforts of our frontline workers and COVID-19 warriors. We have recognized their service and sincerity, letting them know that we value them greatly and that they have our full support. Whilst all this, we have also continued upskilling our people and identifying top talent to join our company. Hiring continued even during the lockdown. We made efficient use of digital technology to onboard new joiners and ensured they were oriented properly with their new company. As I have often said, people are our top priority and we see them as our pillars of strength. They have been and will always be an important part of our journey and growth story. I'm on the slide 6, macroeconomic snapshot. Most of you know more than us. The pandemic has meant that we are conducting business amid a rather challenging and unpredictable environment. The Indian economy had contracted a record 23.9% in the April and June quarter. It is likely to contract around 10% in the financial year 2021. Industrial production plummeted. Inflation, on the other hand, has already surpassed the RBI's 6% policy limit, making further monetary policy easing a difficult call. Lower tax collection can also impede government spending. If I move to the next slide, the good news, however, is that the pandemic appears to be receding for the first time, still not over yet. Cases have been steadily dropping for the past consecutive weeks now. We used to be in the range of 90,000 to 100,000 per day cases, which has now fallen to 45,000 to 50,000. Also, key indicators such as manufacturing purchase, PMI index, fuel and power consumptions are retracing an upward trajectory. Car sales are showing signs of recovery in the pre-festival season. There is even then a looming risk of second or third wave of COVID-19 infection as winter and festive season starts. We have also seen similar kind of things in other countries. Much will depend on community efforts to remain cautious. That's why the short-term outlook remains uncertain across the board, even though these indicators are showing some of them are at pre-COVID level. So our view is cautiously optimistic and a sustained economic revival in India. If I move to the slide number 8, the order distribution. With this backdrop, as you can see, majority of our orders were for our state-of-the-art products and systems and services, with a leaning towards the high growth segments identified in our strategy. And in the second and third charts, you can see that the largest share of orders came from utilities and industry through direct sales. What we must note here is that decisions on our 190 crores worth of orders where we are L1 have been delayed to the next quarter, mostly due to the pandemic, as our customers could not complete the necessary paperwork and the necessary approvals. If I move to the next slide, slide number 9. In the current climate, Hitachi ABB Power Grids in India have been focusing on preserving business continuity. We have continued to strengthen our position to the best of our abilities, engage with customers, and make efforts to recover lost production days. Our concerted efforts have helped us secure big projects win in India and also exports that you can see on this slide. A 100 crore order to strengthen mission critical power infrastructure in HPCL Rajasthan Refinery's Bomber Refinery. Breakthrough transformer orders accumulating to 200 crores from Torrent Power and Mega Engineering. A 10 crore renewable energy monitoring automation order from a leading power transmission company. On this slide, I'm on slide number 10. Strong relationships with our solid customer base and our world-class manufacturing capabilities ensured that exports order remained firm, led by orders from Asia, Australia, and Africa. Among these were 30 crores traction transformer order for PET Metro in Australia, a 34 crore power quality order from Dangote Refinery in Nigeria. Expanding our income from service is part of our 2025 vision and a lever we continue to focus on this quarter as well. This quarter we booked our largest ever high voltage service order for extension and refurbishment of GIS substation for Semcor. Adapting to the new demands, we even launched a new product line of virtual instructor-led training. Moving to the slide 11, our ally in this unprecedented times has been digital technology. We accelerated its use to engage with customers, with stakeholders, conduct webinars, hone employee skills, and win big projects. In the July to September quarter, we energized the first phase of Raigad-Pugalur 800 kV ultra high voltage DC link that is capable of bringing through power to 80 million people, conducted numerous remote factory acceptance tests to strengthen infrastructure across industry, organized and participated in various high-quality virtual events, deep dived in technical session for decision makers, as well as thought leadership positions. If I move to the next slide, slide number 13, financial summary. We did our best and more to swiftly adapt to the new norm and see it bore fruits. Despite restricted business activity and mobility, orders in July and September quarter were up 57% quarter on quarter in Indian rupees 890 crores compared to the previous quarter. And here you may recall about 200 crores, exactly 191 crores worth of orders were deferred by customers and are in the pipeline. As I said earlier, this was driven by multi-pronged customer engagement and product and service delivery strategy, along with accelerated use of digital technologies across operations. It facilitated major order wins from utilities, industries, even amid tight economic conditions. As of September 30, 2020, our order backlog was 5,175 crore rupees, which will provide visibility of future revenue. Our determined order conversion brought us 46.9% jump in revenue to 932 crores to near pandemic levels. Our cash over revenue approach, continuous quality improvement initiatives for better customer experience, accelerated use of remote management solutions, and strategic cost out action resulted in a significantly strong cash position. In the current market environment, such credible performance is worth underscoring for any company, but especially so for us, as we started our standalone operations a year ago with no cash reserves. Strong cash collection also helped in full repayment of all our borrowing by the closure of the quarter. I'm in the slide number 14. As you can see from here, operational EBITDA excluding exceptional items in the third quarter was 68.1 crore, returning operational EBITDA margin to pre-COVID range. Profit before tax, before exceptional item, was 69.3 crores. In line with our strong focus on good governance, Hitachi ABB Power Grids continuously reviews its contracts and receivables. In light of payment delays in a few cases and our analysis, a one-time provision aggregating to rupees 60.48 crores was made in the quarter. This provision will reduce the potential burden on the business balance sheet in the medium term. Yet, it impacted profit after tax in the July-September quarter, which stood at 4.8 crores. Moving to the slide number 15, I also wanted to give an update on our recently concluded open offer. As you are all aware, the acquirers has made an open offer to the public shareholders under SEBI regulations, which concluded in the last quarter. And I'm happy to inform you that only 179 equity shares were tendered in the open offer. This seems to demonstrate a clear indication of investor confidence in our fundamentals, in our growth strategy, and future growth by stakeholders and shareholders. Moving to the slide number 16. For us, COVID-19 was not a time to wait and watch. It was a time for introspection and analysis of our future opportunities. Our long-term growth drivers are intact. For a sustainable transition to clean energy, India needs to prepare for rapidly rising shares of wind and solar, cyber threats, and extreme weather events. Investments in the grid and other key parts of electricity systems will also have to rise. At Hitachi ABB Power Grids, we launched products and solutions that can nurture the whole power ecosystem. You may be aware that in Q3, we introduced our T-Expert ecosystem. It's a complete suite of products, software, services, and solutions that work together and have the capability to integrate with the new and existing digital equipment. It is designed to drive data-driven intelligence and decision-making in the operations, maintenance of transformers, and power grids, allowing millions of dollars in saving through greater flexibility, efficiency, and resilience in electricity networks. Hitachi ABB Power Grids globally signed a definite agreement with a US-based Pioneer Solution LLC, a provider of industry-leading front-to-back office, commodities, energy trading, and risk management solutions. This expansion will give the businesses the most comprehensive offering in the market. It will expand energy market operations, offering and empower energy market participants with leading digital capabilities to navigate the evolving regulatory environment and renewable energy goals. Moving to the slide 7, probably you have seen this slide in the previous quarter. To summarize, as many of you are aware, Hitachi ABB Power Grids serves utility, industry, infrastructure customers across the power value chain, products, software, systems, and services. We collaborate with our customers through entire life cycle, right from the planning stage and engineering phase to operation and maintenance phase. Our strong footprint, scale, largest install base, and local capabilities give us the strength and expertise to power India's sustainable energy future. Moving to the slide number 18. Hitachi ABB Power Grids brings together the best of two highly respected companies. Hitachi's leading digital technologies merged with world-class power grid solutions will help us to actively support the global transformation and decarbonization of the energy system. The new ownership will facilitate growth opportunities in emerging areas such as mobility, smart cities, industry, energy storage, and data centers. Synergies and complementing technology expertise will bring us new market opportunities and enable us to deliver greater customer value while harmonizing social, environmental, and economic value. So that was a summary of our performance in July to September quarter. Now we can open the floor for your questions. Thank you for listening.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to limit their question to 2 per participant. If time permits, you may join the question queue for any follow-up. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Sujit Jain from ASK Investments. Please go ahead.
Yeah, hi Venu and team. A few details. In the contract where the 60 crore receivable for which you've taken a provision, what is the total amount of the contract? What is the bank guarantee amount involved? What is the aging of the receivables? Is this the full provision? Then apart from this, what is the order pipeline that you expect in 2 to 3 years? The royalty post FY20 to both ABB and Hitachi, you clarified last con call 4% is the royalty for this year to ABB. Is it safe to understand that traction transformers is something that remains with us? Traction motors and drives goes to ABB India Limited. And some balance sheet details in terms of receivable days, net working capital days compared to H1, the cash and the cash flow from operation for 9 months. And just to have full numbers on slide 8, you just have given pie chart. Thanks.
Thank you, Sujit. So you have a multiple questions, so let me just answer as many as I can, as we can. So first of all, the question, the traction transformers, okay, the entire transformers, including traction transformer, is part of our power grid portfolio, okay. So whatever was part of the power grid portfolio, which is basically the entire transformer portfolio, entire high voltage portfolio, entire grid automation portfolio, and entire grid integration, both HVDC and substations, and then power quality is a part of our portfolio. And with respect to the provisions we have made, what we are talking about, we are basically talking about just 2 contracts, okay? And in that, one is the EPC, another one is the other segment of the contract. So it was quite old. It was more than 1 year old. And based on that, we have taken a decision. In one contract, we have provided, fully, and another contract we have provided the majority of it in that. And third question, probably, Ajay, you can take a couple of questions.
Sure, Venu. So I think one of the question was about the contract value. So I will say that the contract value would be hovering around, let's say, 450 crores. That is the total contract value on which, that we are talking about. And then we have already covered, the aging part. So that is already covered.
Basically, other questions, is talking about, royalty and other things.
So royalty, come again, because what is the exact questions on the royalty?
See, the question was in the last phone call, it was clarified 4% royalty to be paid for FY20 to ABB. So it continues in FY20, but beyond FY20, what is the percentage of royalty paid to be paid to ABB and to Hitachi as well?
So the royalty will be hovering around 4 to 4.5%. That is what we see at the moment. So it will be within that range itself.
To ABB?
Yeah, so we are talking about, to the group companies, yes.
Okay, and quick clarification on this bank guarantee amount involved for these contracts, 450 crores.
Sorry, Sujit, we will not be in a position to give you that exactly the bank guarantee amounts and the thing. The whole idea is, we, as you know that, Hitachi, ABB Power Grid, we take a very conservative look, and the moment we see any issue, so we will be in a position to, take suitably action on our provisioning side, while our efforts to, collect the money will continue.
But in case it is encashed, then the amount of recovery goes up to that extent, not just 60 crores, but the amount, and the bank guarantees encashed. To that extent, your recovery
we don't see that kind of situation, Sujit. We don't expect that kind of situation.
If you can name the clients?
No, we will not be in a position to name the clients.
Sure. And your order pipeline?
We respect the customer's privacy on that. We do not name any contracts like that. Thank you.
Thank you. Mr. Jain, request you to join the question queue for any follow-up as we have several participants waiting for their turn. Thank you. The next question is from the line of Renu Ved from IIFL. Please go ahead.
Yeah, good evening, sir. And
evening.
congratulations for a reasonable operating performance, though at the provision level it does impact the growth. So my first question is just to understand now that you're sitting on almost 5,100 crores of order book, this seems to be pretty reasonable. And your comments did indicate that most of the COVID-related headwinds are behind. So incrementally, as we move towards fourth quarter and next calendar year, should a double-digit growth be now very much comfortable on the current visibility of book that we have? Or you perceive there could be any execution headwinds both on domestic and export market front? That's my first question.
Yeah. So thank you, Rain, for your questions. After gradually opening after the lockdown, so today we are now more than 95% of our pre-COVID level. Okay, all our factories are working, and all our project sites are working more than 95% of pre-COVID level. So while we also see from our customers with whom we have the existing contracts, the need to pick up the materials. So that's the reason we are reaching almost 95% of the level in that. So having said that, the COVID itself is big uncertain, right? Like we have seen in other countries, wave 2, wave 3s are coming. So we are hoping that we will be in a position to navigate, and assuming that the same situation what we have seen in August and September do continue, September and October do continue, then I think probably we can reach definitely a pre-pandemic level, top line.
Sure. So the second question would be more in terms of, you did highlight that there was a cash flow driven execution strategy, but at the same time, if you see interest costs have gone up sequentially as well. So if you can help us understand that, how has the balance sheet moved in terms of working capital and cash and debt on books? At the same time, on the order inflow side, are we now looking at the pipeline maturing given many orders are lined up in the pipeline for the next 6 months? So if you can give some color on the order inflow pipeline as well, along with the balance sheet detailing there.
Sure. So I will do that, but before that, let our CFO Ajay talk about the interest part on that, interest cost.
Yeah,
sure.
Yeah. So fine. So the interest cost basically in this quarter has gone up because we had a significant, borrowings in the earlier quarter. And as already we have mentioned that we had a very good collections in this particular quarter where we are now able to repay all our short-term loans. So it is basically the interest incremental cost is coming on account of the borrowings that we had in this quarter.
Yeah.
So at the end of the current quarter, sir, what is the net debt on books? Are we net cash or debt-free? How is it?
So at the end of this particular quarter, we are debt-free actually. We do not have any debt.
Yeah, that's what I mentioned, Renu. At 30th of September, so we are a debt-free company, and once again, let me reiterate. So our cash over revenue approach is helping us to drive our receivables, which are pending with our customers, to collect and become a debt-free in that.
Sure, so if you can just comment on pipeline, and that's the last question from my side.
Thank you. On the pipeline, what we are seeing is that we are definitely seeing a robust pipeline compared to the previous year in the same quarter. But what is concerning here is the decision making. Okay, while we know that there are a good amount of pipelines, especially on the transmission side and the central transmission side, and also TBCB projects and the green energy corridors and the renewables. And on top of that, where some of our high growth segments such as the metro, rail, and also the power quality, and also the digital capabilities are really coming up. The key is the decision making, and we believe that with the relaxation of the economy, there will be enough time from the customers to get this finalized, get going in that. So all in all, I think. We are continuously monitoring this and continuously engaging with our customers through our digital technologies, using digital technologies, and we are really getting ready as and when customer wants to decide any particular segments of the orders.
Would it be possible for you to quantify the value of this order pipeline for the next 6 months, which could materialize a quarter earlier or later, but what would be the broad size of the pipeline?
No, unfortunately, Renu, I may be disappointing you, but what I can definitely give a little bit of color is, renewable is definitely a big portion of it. Renewable and the metro, and not metro, rail segment as a whole. The rail segment, which includes the traditional, rail segment and the metro rail, and also the corridors which are being built by the thing. So they are quite a big chunk of pipeline of this.
Thank you, Ms. Baid. Request you to join the queue for any follow-up. We'll move to the next question. That is from the line of Nikunj Doshi from Bay Capital. Please go ahead.
Yeah, thank you for the opportunity. Just one question. Can you provide some granularity on the order book position that we have? So what is exports, what's domestic orders, and what kind of industries or the segments are we getting these orders from?
Yeah. Thank you, Mr. Doshi. I think we have been also maintaining our exports in the range of 15 to 20%. Okay, and then we have a service 10 to 12%. And the orders, rest of the orders are from utilities and industries. So we are, right now our utilities are a big chunk, in the range of 60% or so, and the rest is in the industries. As you have seen this quarter, we won a big industrial project from HPCL Bormer Refinery. So 100 crores project we have won from industrial customers.
Okay. Thank you very much, sir.
Thank you.
Thank you. The next question is from the line of Abhishek Puri from Axis Capital. Please go ahead.
Thanks for the opportunity, and congrats for a decent set of results, sir.
Thank you, Abhishek.
Sir, just wanted to check, one, in terms of base orders, what will be the quantum in the current quarter? And second, in terms of the growth that we have seen in these services and exports, I think that your best, if you can also talk about YOY growth. And lastly, in terms of strategy for the India business, given that buyback has not been successful, and how does the parent company look at this now? And in terms of specifically from an exports perspective, are we adding any new products or categories here which can be used for making India as an export hub in future?
Okay. So before I answer other questions, just want to our General Counsel Poovanna to answer on the open offer. Poovanna, the need for the open offer and how.
Thanks, Venu. Abhishek, in terms of the open offer that was made, this was triggered by virtue of an indirect acquisition that was exercised by Hitachi, and this was a mandatory open offer that was made. So it doesn't mean that it was not successful. The very fact that only 179 equity shares were tendered by the public demonstrates faith in the industry and the company. So it may not be correct to say that it did not succeed. Over to you,
Thank you.
My apologies. My question was in the sense it was not related a comment on a strategy. The parent would have wanted India as a high growth market. Parent would have wanted, a larger chunk of his business. It has not been successful. So is there any change in strategy from the parent level, whether to more products here or be used base for manufacturing?
Sorry, you are not audible. Can you please come close to the mic if you don't mind, Abhishek?
Sorry, Venu. So my question was related to not regarding the success of the buyback. It was more from a country, how the parent sees the country as an opportunity. Given that they started to buy the portion, they
Sorry, Abhishek, your audio is still breaking. I would request you to please come in network area, please, because the audio is fluctuating.
Yeah, but I got the essence of your question, Abhishek. In case if you are not able to talk, or let me just answer to you from parent, our new parent, which is Hitachi. I think they see India as one of key growth area, one of the key, manufacturing base where they would like to leverage not only from India but also from the rest of the countries. So I think that's what I was just thinking, that it's a key market, and also leveraging our existing engineering footprint, existing manufacturing footprint, existing design capabilities for the India and also rest of the world in that. So that is the one. And then your another question was on the export. Is that right? Can you please clarify on that a little more? Abhishek, are you able to hear me?
Yes, I can hear you, sir. I hope you can hear me.
Yes.
Yeah, so I think the key point here was, are you making India as an export hub? Like for ABB India, they are trying to get a lot of products into India and, making that as an export hub. For you, how would that strategy be from Hitachi, since the parent company has changed?
Yeah, we have also been telling you from the beginning, if you're following us, we would like to make, India as one of our key export hub, and not only for the, nearest countries or the African countries, but also in the rest of the things. We have 4 or 5 products where we are a global global feeder manufacturing facilities in India, where those products is only supplied from us. So from that perspective, export is one of our key levers for us to grow in India.
Thank you. And lastly was the base orders, if you can just highlight that, and I'll join back in the queue. Thank you and all the best.
We will not be giving a split between the base and large, Abhishek, because normally, we will take all orders in a one thing. And as you see, this quarter, we had only 2 large orders. One is HPCL refinery, another one is the transformer order. Barring that, rest of the things are all base orders.
Thank you and all the best.
Thank you.
Thank you. The next question is from the line of Harshit Patel from Equirus. Please go ahead.
Hi, sir. Thank you very much for the opportunity. Sir, my first
Harshit, request to come a little closer to the speaker.
Thank you, Harshit.
Yeah. So, sir, my first question would be, the government of India has banned the imports of power equipment from the neighboring countries, including China, for all the new tenders. So, sir, what kind of an opportunity that provides us with? If you could quantify the Chinese imports in high voltage and the medium voltage categories and the incremental opportunity size for us, then it would be very helpful, sir.
Okay. Let me give from our perspective so that you understand. So, you all know the renewed push for Make in India and Self-Reliant India clause giving preference to supplier, with meeting local content requirements of 50% is now applicable in all government contracts. And we have seen some limited advantage of this. And private industries players may also give preference to Indian suppliers. And we have seen the private players also now ask for local content. With the above, we may start to gain in certain parts of our portfolio, while we are still in the process of indigenizing some of other product ranges. Changes like this only spur forward our long-term view of building India as a manufacturing and export hub. And at the end of the day, what we as a company, we are a global company, we always look forward to level playing field when it comes to the competition, whether they are coming whichever country they are, as long as we believe that we have a level playing field and we have a right value propositions to our customers to win over that. Thank you.
Sir, you just highlighted that you would be stepping up investments in few of the areas where the indigenization levels are a bit lower than the rest of the portfolio. So then, sir, what these areas would be? And sir, if you could give us a sense on what would be our blended localization levels in India, including the components as well, then it will be very helpful.
Yeah, as you know, we have been in this country manufacturing for the last 6 decades, and we continue to leverage our global supply chains and also locally indigenize in that. We always have the strategy not only from one particular supplier from one country, but we can always have fallback strategy in the event if any one particular country is not acceptable. So we quickly adapt to the needs of the authorities in meeting in that. So our localization investment plans are a continuous basis. At any given point of time, we always looking forward to add more local value add in the countries in the entire our portfolio, entire product range.
Sure, sir. Thank you very much, sir, for taking my question.
Thank you. The next question is from the line of Bhavin Vitlani from SBI Mutual Fund. Please go ahead.
Thank you for the opportunity. Just one question now from my end. What would be the proportion of the RP800 left, and would it be possible to share what was the share in the revenue in the calendar year to date, and will that cause a little bit of a base impact for next year?
Yeah. So thank you, Bhavin. I think as we talked also probably in the last quarter, RP800 project has been booked in 2016 with completion of 36 months. So we are in the fag end of completion. As you have heard from my opening comments as well as the press release we have given, we already commissioned first phase of the link already, and right now the whole project is under commissioning. So the bulk of the revenue is already completed much before.
Sure. Would there be some base impact because of this in the following year?
There is a bit of residual thing in this here, but not that much. The bulk of it is already over.
Okay. If I may, given the higher share of the revenue from RP800 in the current calendar year, which could be absent next year as we don't have any HVDC, would that lead to a lower growth rate in the next calendar year?
That's what I'm saying. What I'm trying to say is that this year itself is not much of RP800.
Oh, okay. Sure. Yeah. Thank you so much. That was my question.
Yeah.
Thank you. The next question is from the line of Henil Bagadia from Equicorp. Please go ahead.
Hello. Thank you for the opportunity, sir.
Bagadia.
Yeah. So can you briefly touch upon the potential of the new growth segments like data centers, smart cities, e-charging solutions, that is the market size right now, and the possible growth in the next 5 years?
Yeah. So definitely, these are the very high growth segment from our perspective and has a huge, potential, and also from our technology and products and portfolio standpoint, we are fully gearing up to do that. So let me start from the EV charging. As probably you have heard from us that we have signed an MOU with one of the largest bus manufacturers, Ashok Leyland, in India in the beginning of this year to use our flash charging technology for bus mass rapid transit systems. So we are right now working on the pilots of this, and electrical vehicle is one of the key growth for the government, key growth enabler for the government, and then we are really positioning, and we have a complete portfolio on not only the flash charging but also the fleet charging. So that is the one area, and we are right now assessing exactly the market size and so on and so forth on that. The second one is data center. As you know, the data center with so much 4G itself, the data center is going up. With the 5G coming up, the huge amount of data, dealing with the data, and the need for the more and more data center is everybody's knowledge. So we have a complete value propositions to our customers, and not only from the grid connections and the technology standpoint, but also on the automation part on that. So there again, we are well positioned and doing the data center projects in that. And another big high growth segment is definitely on the rail. The rail is both on the rail of cross-country electrification side and the loco side, where we have our products, so traction transformer, and we have a power quality side, as well as on the metro side, where we have our SCADA and other things, is definitely a growth area in the coming quarters and the coming years.
Okay. So also on the product side, so what will be our cost competitiveness given the export orders, and so what will be the margins on the exports compared to the domestic orders? If you can answer that.
Yeah. Thanks, Bagadia, but we'll not be...
I was actually coming from the point wherein, sir, you said that you have got an ambition to make ABB Hitachi a manufacturing hub and supply a lot of orders from India. So from that side, the cost competitiveness part.
Yeah, that's right. So when we're talking about the cost competitiveness, we look at the two things. One is the productivity. Okay, so that's where we have a lot of initiatives to see that our productivity is really a world-class productivity and on the quality standpoint. And then we have a complete technology to suit every part of the markets. Okay. So with that, I will not be able to give you exactly the what kind of the price differential between the export market and the domestic market. But again, I talked about we will be a level playing field. We will always like to have a level playing field, and to that extent, we will position our products.
So given that there is a lot of digitalization content that is added to the products, that is AI, using AI, using automation and several other tools. So what is the focus of the company, given that there are a lot of security breaches that's happening, and given ahead that as the data consumption increases, the breaches could also go up. So in terms of security solutions in order, as well as to the customers that were already for whom we had already executed the orders.
Yeah.
So how will that segment pan out?
I think we see interest in digital technologies from both the utilities, industries, and infrastructure. And we have seen demand for digital substations from utilities, and the number of such opportunities will likely increase going forward. And cyber security is one of our key value propositions to our customers. And whatever digital technologies we are deploying, cyber security is always part of our offerings. And we are also taking a lot of engagement with our customers that how the networks need to be more cyber proof, and this is exactly our value proposition, and this is where we can clearly add a differentiation with respect to others by offering the most cyber secured digital solutions, whether at the transmission level or the distribution level or at the consumption side of the life cycle of the power side. Thank you.
So does that give us a completely new segment, or is it do we get that particular segment just within the order itself?
It is basically, I would say, it is a two-pronged thing. One is that, as you rightly said, it is also from the existing customers is a bit of more of orders coming from that, and there is also the new segment we come in where where the interfaces happening between the customers and the rest of the side, and that's where the new segment of orders will come in for the cybersecurity related things.
Thank you, Mr. Bagadia. I request you to join the question queue for follow-up. The next question is from the line of Rahul from Shifa Family Office. Please go ahead.
Thanks for the opportunity. So my question is regarding now the parents has acquired and it's been 6 months. Have we identified any vertical or new segment from the parents portfolio? Question number 1. Question 2, down the line, how would the parent would like to envisage Hitachi India? It's right now we are into power segment. Most of the things are into capital goods segments. How would Hitachi would look in next 3 years, and how the growth will come? Will it be through capex only, or we will be able to serve in case of some tailwinds comes? Thank you.
Okay.
Sorry, ladies and gentlemen, it seems we have lost the line from Mr. Venu. Request you all to stay connected while we reconnect him. Thank you.
Sorry, Rahul, I think the line got disconnected. So if you could Please repeat your question if you don't mind.
Sure, sir. So my question one is, now Hitachi is our parent, and have we identified any new vertical, new product portfolio through the parent's portfolio side?
Yeah.
Question number one. Question number two, how would we want to look like down the line 3 years from a capital goods or power segment company to how we are envisaged from the parent's perspective, and the growth target for next 3 to 5 years or maybe more, and how it will kick in? Is it like through capex, which we are already doing, or can we serve some tailwinds if it comes? Can we serve it without capex? Thank you.
Okay. Thank you, Rahul, for very interesting questions. So let me just give a little bit of background, even though we are now part of the Hitachi, but we continue to operate as a standalone company headquartered in Zurich. Okay, we are part of the Hitachi's ownership, but our company, we have a clear strategy and we have a clear vision, and as you see from our 2025 vision, so where we want to go, how our portfolio we want to do, where we want to grow, it's a very clearly done that. Having said that, we have traditionally, the power grids, we are concentrating on the customer portfolio of utilities, industries, infrastructure, and transportation. But with our new owners, Hitachi, where they are very strong on the mobility side, and the smart city side, on the energy storage side, and then the data optimization, that is IT data center side, and that's where our focus areas and those kind of things. The smart cities and the mobility and industries where in the consumption side of the industry and the utilities in that. So these are the areas henceforth we will be focusing, in addition to traditional areas, traditional segments where we are very strong. We continue to leverage our strong positions and build on to that, like utilities, industries, infrastructure, and transportation. So where the growth comes from? The growth comes from focusing on the high growth segments, which is where we are nurturing on that. So the high growth segments such as data centers, such as mobility, such as your renewable integration, and these are and all those things are very high growth segment, and where our company is very well positioned in terms of offering our systems, services, software, also on the product side in that. So the growth not only comes from the capex but also opex. As we are going forward, we are also seeing the customers are also looking at it is not only how much it costs, but also how much it cost customers to run this particular equipment. That's where we are focusing on that. We are having several digital solutions on a remote monitoring solutions to our customers, where then customers can also manage these equipments by deploying our digital and remote service solutions in that. So we believe that both capex and opex are going to come hand in hand in that. So that's where, if you have seen my slide number 18, we are talking about both operational technologies and IT technologies, and that's where the energy platform we bring in and the digital platform our new owners bring in. The combined offerings can co-create innovative solutions with our customers and partners across the value chain, right from the planning stage through the building phase and operating and into the operation phase, leveraging energy platforms and focus on the intelligent grids, and that's where we are looking forward to.
Thank you.
Thank you, Rahul.
The next question is from the line of Manish Goyal from Enam Holdings. Please go ahead.
We will take this last question because of the time. I think it is the last question.
Sure. Sir, thank you so much. I had a question related to margins, which have been fairly strong in this quarter, and that has partly been helped by lower other expenses. So would it be possible to offer clarity? Is it that it's a quarterly phenomenon, or we should consider it as a new normal for the company? And related to that, like basically, how do we see EBITDA margins going forward?
Yeah. So let our Ajay, our CFO, answer the first question, but we will not be in a position to answer any forward-looking of your second question. So what kind of margin level we will not be in a position to share with you. But the first question, I think, Ajay, can you just...
Fine. Thank you, Venu. So basically the margins that we see in the current quarter, so already we have seen our operating expenses has come down, and that is also supported in the margin for this quarter. And we know that like the major benefits that we are getting on the travel cost piece, so that is the one area where we are able to reduce. So this is mostly because of the COVID-related situation that we are having at the moment. So some of the expenses that we see has come down compared to the last quarter or the preceding quarter, mostly on account of that.
Yeah.
Whereas when you talk about the gross margin point of view, that is purely on account of the product mix, that we see vis-a-vis the last quarter.
Yeah.
So just to clarify, how much of this is sustainable going forward? I agree that travel cost was lower this quarter, but do you think it sustaining at current levels, or you see that some of these costs coming back in quarters coming forward?
I think if I can answer that question, Manish, I think that is our endeavor is to come to that particular level, sir.
Sure. Thank you so much.
Thank you.
Thank you. Ladies and gentlemen, that will be the last question for today. I now hand the conference over to Mr. N. Venu for closing comments. Thank you, and over to you, sir.
Thank you, Aman, and thank you all once again for taking your time from busy schedule and attending to it. And thank you for your questions. And if you have any more questions, so please reach out to us. We are more than happy to engage with you and answer you any of your unanswered questions. At the close, I would like to say that this is a pandemic has shown us a glimpse of our capabilities to handle challenges with our collective effort. It has also underscored the urgent need to balance social, environment, and economic values through sustainable planning, policy, and technologies. I'm looking forward to better days. And I also want to take this opportunity to wish you and your families a very happy, colorful, and safe Diwali. Please take care and stay safe. Thank you.
Thank you very much. Ladies and gentlemen, on behalf of ABB Power Products and Systems India Limited, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.